Welcome back to the Realm podcast, our series that is going into different cyber insurance, cyber technologies, cyber warranties, seeing all things cyber. I'm Robert Williams, and again, I'm still joined with Brian. Go ahead and introduce yourself again if you want.
Yeah, hey guys. Brian Waltermeyer, CEO, founder, DLT Alert. Thank you for visiting.
Yeah, and we're always appreciative of new listeners that come in here. So today's episode, we're going to be diving into a little bit for uh, warranties. One of the things that DLT does is they do cyber warranties, which may be a little different than things you've heard of. Usually, you hear cyber insurance, and cyber warranty is not really something we hear often. So I kind of want to hear a little more about the warranty, kind of what would be the differences and what should be the expectations of a warranty over the insurance.
Yeah. Yeah, no, it's a good place to start. I appreciate the question. So, you know, everything is based on the association of a peril or an incident, right? And what coverage do I need to protect my business, in this case, from a specific peril or set of perils? And, cyber insurance has been having a difficult time achieving that profitably. There's, upwards of 65, 75%, in some cases over 100% loss ratios. That means, and some carriers are losing 100% of the premium that they sell associated with cyber policies. That means that the risk that they are measuring and forecasting with relation to the price of the premium and the duration of the policy is inaccurate or measured not well, right? So they're very broad, but because of those dynamics, it's not just that they're measuring wrong. That cyber attacks are just really kind of taking on one of these hockey stick curve growth trajectories. It really started in COVID time, but it's hard to judge and assess based on a paper contract, a set of questions, and then a price, right? Because cyber attacks are so dynamic, what's happening is so dynamic. They are also interconnected because of the internet, right? And one business can lead to another. For example, a third-party service provider and a healthcare entity and the CPA firm that's doing the accounting work on the back end. The healthcare entity can get hit, the service provider can get hit, the CPA can get hit, and then other accounting customers can get hit of that CPA. We're completely unrelated, right? So it's they often categorize them as like natural catastrophes or nat cat for that reason. So there are some significant challenges in the cyber insurance space currently, more than ever. And cyber warranties, on the other hand, are not as broad of a coverage. They're generally a bespoke level of coverage, and they can be looked at in two different ways. The first way would be, I bought a hard drive for my computer and the hard drive failed. That piece of equipment is under warranty. That's how people typically see things. Or I bought a car and I bought the powertrain warranty for 100,000 miles, and I got this warranty. If anything happens, I don't have to pay for that. Then there's kind of this world in between that can create a bespoke level of cyber protection, but associated with some services that are providing a level of coverage. So the way that we looked at it is, it's really an intelligent way to provide financial protection for a business through a warranty, because we can assess the risk through technology and integrations at a much richer and persistent way than a carrier can or are. And we can associate a level of coverage with that data, with that assessment, that will provide the coverage that a business needs to get through a incident, right? So although not as broad, it can still provide the life-saving punch that a business may require post-incident. And you can associate that with different types of services and things like that. But essentially, warranty is very narrow, typically, and often associated with product or service, whereas cyber insurance is a much broader level of coverage that is providing some type of remedy and, you know, is not able to assess all the risks as well, I would say. Okay. So we're literally living kind of in between those worlds, leveraging a lot of the technology, all the real-time data that we can gather, and then providing a level of coverage based on those tools, and then leveraging a lot of our back-end technology to help add more value for the customers and, you know, costs and things of that nature.
Right, of course, yeah. And I do know something that happens with a lot of companies sometimes is they won't qualify for insurance. So,
right. Yeah.
And I know, well, not that I just work there, but I know that these warranties are very specific, which is if you have this utility, we're going to give a warranty for that utility. If you have this if you're using this program, we can make sure that that's working by tapping directly into the data. As you mentioned last week in the episode, you talked about, you know, just dealing with the data, not this person's account of what happened or that person's account of what happened. We're not talking about a car accident. The light was yellow. We're not talking about that. Right now, we're just looking at the data. And,
that's right.
And covering the data from those services. So that's very specific on those warranties. And in most cases, I think more companies will want to have that specific type of coverage because they'll want to have those specific fail safes in place rather than just paying, you know, the absorbent amount of money for
that's right.
for an insurance company.
Yeah, and what we're seeing is, like you mentioned, it's becoming harder for companies to obtain coverage, typical cyber insurance coverage. One, because of the cost. Two, because of the securities or the cyber tools that insurance carriers want to have in place before they'll underwrite a policy. They want to be super safe. They want assessments done, and there's a lot of jumping through hoops with additional cost to even maintain the same level of coverage that they may have had in the past. So from a value perspective, businesses are looking at that and saying, well, yeah, I think I really need this, but I'm paying 3, 4, 5 times more, and I'm having to do all these other things just to get the coverage I had last year. And they're looking for alternatives, right? So when I say that we're living in between the full cyber policy and what typically people associate as a warranty, we are, because what most warranties are tied to a service. And like I mentioned before, a hard drive fails, you could send that hard drive in, get it replaced. There are services now that are saying, hey, if you use our service and it doesn't work, you could maybe get some money. But what they're finding out is they're really strict in the terms and conditions of the service. And it's more of a marketing ploy to bolster the perceived value of obtaining that service than the actual feasibility of financial protection in the case of a failure in that service, right? So we looked at this. We can access the data from these services, and we can access the capacity from world-class reinsurers, and we can facilitate the underwriting, the assessment, and the adjudication by integrating these tools together and create a hybrid approach to full cyber versus traditional warranty that will deliver a level of protection that will help a small business through a peril or an attack of some kind, right?
Right, yeah. And that ties into what you were mentioning last week about helping out the small businesses. And this actually is a perfect segue to what I wanted to kind of ask next, which is, you know,
I'm glad I could help.
Who should benefit the most from these kinds of things? Because just from a high level perspective, from what we've discussed last week and today so far, is it seems that, you know, this world between that you mentioned, the world between worlds, if you will, is you've got this idea of a tool that seems beneficial for both, you know, people that want to have insurance and then the companies themselves, of being able to help just kind of everyone. Instead of having to spend
Yeah.
3 weeks letting people dig through logs to find out what went wrong, hey, here's your
Right.
payout. It's going to happen the next day. So, um, but that's the question here is, from your vision and what you wanted, and versus the reality of what we have today. Who who was the benefited target? Like, who did you want to benefit the most from this?
Yeah. No, I appreciate the questions. We wanted small medium business to benefit the most. They're the ones who are getting squeezed out of the cyber insurance market.
Mm-hmm.
When I say prices, premiums have increased, they've increased hundreds of percent for the same level of coverage that they could get before. And as these ideas were gelling that we discussed in the last episode of the realm, we had on our managed service business, we had customers coming to us saying, "Hey, I can't renew my cyber insurance policy because I don't have two-factor authentication in my cloud backups. How would that even happen?" And in some cases, it couldn't happen, right? Because they
Right.
didn't control the cloud backups, or their provider or us, or whatever the scenario is. And so what's that mean? They can't have coverage anymore, and now they're
Yeah.
just left out in the cold because look, the risk is higher. Risks are escalating. Carriers are doing their best to assess these risks, to price these risks, and what they're really doing is they're asking for more protections of the business, and they're asking for higher premiums to cover that risk.
Mm-hmm.
And we just saw that there was a better way to attack both of those variables, right? And small medium businesses are now able to get a level of coverage and have it remediated near instantaneously at a monthly rate, right? Which is fractions of what they might pay for a full cyber policy. And granted, in all fairness, it's not a full cyber policy, but it is a level of protection that if they are hit with that ransomware or that catastrophic attack, that we're assessing it and they're getting a payment same day, hours, et cetera, as fast as their financial institution will accept the payment, which that's really the bottleneck. It's not us, because we're operating on chain.
Right.
So, but I digress. So, really, we wanted to help those people who are being left out of the market, which are a lot of the customers that we have on the managed service side. So we were seeing firsthand the challenges, and now they're just being left out in the cold. So, okay, so I paid $2,500 last year for coverage, and now you want me to pay $10,000? And before I do that, I have to put two-factor on my cloud backups. Amazon won't let me do it at the time, or whatever, right? So they're just like, well, this is a terrible situation. What do we do, right?
Yeah.
So that's we're filling that gap.
Yeah.
Right.
It just seems a little unfair to have to increase the requirements for your insurance and increase the premiums in the same breath. I feel like if you're
and
increasing
it just
those,
speaks to their capabilities to assess the risk properly, and it's they're working with antiquated models
mm-hmm.
that worked for life insurance, because the predictability of human lives has been somewhat predictable for the past 100, 200 years, with variations, but
mm-hmm.
Minimal. But cyber attacks have not been predictable, and that's the problem. So they're using antiquated models. They're trying to change those models to adapt to this whole new world of peril. And technology does what technology does best. It kind of, like water, it finds its way into the most advantageous points, or in some water's case, the worst points for you, your house. But you know what I'm saying is it goes in and it starts to create a solution unto itself, and that's what we've done successfully.
Right. Yeah. I mean, it's definitely filling in the gaps, especially with the unpredictability with, when COVID happened and cybercrime just kind of skyrocketed, cyber threats, all sorts of things. And it just reminds me when you mentioned earlier um, something will hit one place and then it will hit somebody else and then it'll hit somebody else and then just this big daisy chain of all these people getting hit. It reminds me of the SolarWinds hack that happened several years ago.
Yeah.
That they were like the largest MSP provider, and they themselves being hacked. That's not just SolarWinds. That's SolarWinds plus the MSPs that use it plus all of
Right.
those clients. That is a huge level, and that's not even going into what's happening more recently, where we're having, as soon as a Microsoft vulnerability comes out, there's there's something exploiting that vulnerability happening almost day one, to the point where if there's a patch, some people don't even want to patch immediately because they don't know if that patch is going to introduce a new vulnerability.
Right. They say test the patch first.
Yeah, they always
But
want to
then
test
what's
it.
the time to test the patch? Right. So now you have this
Yeah,
gap,
you don't
this
know.
risk. Right.
So, but yeah, it's always interesting. But going back to a point you were making earlier about these warranties that some companies are starting to offer, always read the fine print and find out exactly
Yeah.
what you're getting from that. Um, but
Yeah, well, that was one thing that I actually enjoyed was working with an underwriter to create language or the T&C, terms and conditions as they speak in the insurance industry, that were extremely simple, extremely black and white, clear. There's in a full cyber policy or basically any full insurance policy, it's very broad coverage, which the purchaser might see to their advantage. But anyone who's ever filed a claim knows it's not written to your advantage. Right? It's written, it's in the eye of the beholder's advantage. The underwriter who says, oh, well, this wasn't whatever it might be. Well, your tires were bald, and so that kind of falls back on you. So the reason you slid off the road was not because they were wet, but because you didn't maintain the car. And here's this term that says you have to maintain the car. Well, wear and tear, or what's kind of being well known now is Lloyd's of London is no longer accepting claims that could be from state actors, right? And so I believe it was not Petya attack that happened, and it propagated the kind of like the nexus or the attribution really was around like a some type of accounting software in Ukraine, if I remember correctly. The servers were housed in the closet. They're very loosely protected, not a lot of security protocols in place.
Right.
And then Lloyd's, the underwriter for I believe it was Maersk, the shipping company,
right,
said, well, this is most likely the the act of a government. Well, it started at an accounting firm. Yeah, but it was planted there through this and that, and we don't cover that. We can't be involved in acts of war.
Right.
And then it falls under a whole another clause. And so when you start to, I know we haven't talked about it much this episode, but when you start to use logic, computer written code, and things that are called smart contracts, that is essentially like an encapsulated code that is only operable when certain conditions are met. And that's how most people look at a paper contract for insurance is, yeah, I slid off the road, condition was met, where's my payment?
Yeah.
And now the fun really begins for that guy, right?
Yeah.
Where in our situation, because we have translated a very straightforward, simple level of coverage into a binary code residing in a block on a blockchain that will only be triggered when data hits it that meets certain triggers,
right,
as people are expecting with paper contracts, but that's not the way it comes to fruition is the way it's always been. It's an interpretation, as we're speaking about. But in this, there is no interpretation. If A, then B.
It's basic
If
logic.
X, then Y. That's right. It's
Yeah.
it's binary. It's in some fashions it's parametric in the insurance world.
Right.
But that to me, that's really exciting, because you're able to increase a level of truth in this necessity of financial protection for your business that you can never get in a paper contract, because it's left open to interpretation at some level.
Yeah. Well,
right. So when you
always.
look at it in that fashion and you say, the data says this, the smart contract can't change because it's on chain, and this are the inputs were validated by a third party, decentralized network, and you start to raise this level of truth, I think in the long run, you're going to see the entire world move in this direction. And like we spoke about in the last episode, some of the biggest financial institutions are already moving in that direction.
Absolutely.
Bank of New York Mellon, the largest asset, custodial manager in the world. DTC, largest stock clearing, quadrillions of dollars in transactions.
Yeah.
Swift, the back end for all most wire transactions worldwide. They're all moving to use some form of Web3 technology and validation. So why would anyone bet on a paper contract when you could have something that's out of the reach of human interpretation?
Yeah, well, I mean, I definitely would agree. I mean, this is not my history or wheelhouse, but knowing insurance companies, and the running joke is the insurance company will do everything they can to not pay out. I mean, a short sidebar, one of the first major accidents I got into, I got rear-ended at a stoplight. Light was red, light turns green. I put the clutch in, put it into first gear. It was a manual, by the way, if anybody doesn't know what that means. Put in the clutch. Before I even get it into first, boom, get rear-ended by this guy behind me. And I'll spare you some of the details of the character of this person, but long story short, while we were waiting for his insurance, he offered some things that are legal in some states and not others, and not legal here. And when I was making my statement to the insurance company, and I told them, pretty sure he was under the influence of something, and they're like, but you were driving a manual, and you stalled the engine. And I was like, okay, but he rear-ended me. If I even stalled the engine, that shouldn't matter. Like, oh, but you might have stalled the engine. And it took an extra 2.5 months of them calling me and getting my statement, and me basically saying this dude was high and rear-ended me. This should be an open and shut case. And they're just like, well, it's a manual. You could have stalled the engine, but it's you know, we're what we're looking at here with these technologies is as I mentioned, I can't remember if it was this episode or the one before, we're eliminating that he said, she said, just getting rid of it. It's just, we're looking at the data. Did this happen? Did this not? And I know some car insurance, some of these smart cars, like really smart cars, have onboard computers that log what happens at the time of accidents.
Yep.
So
Teslas
like,
all have
they'll
cameras
see your
and
speed and all that stuff. So it's definitely the way we're going.
That your anecdote is applicable, and you know, people have just never been, you know, shown a better solution.
Exactly.
Right. And you know, that is a to us, it's a driving factor in this business is to increase a level of trust and, you know, just business process that people aren't used to, which, you know, we're having some success with. But I think long term, this was what everyone's going to go to. We're just early. But it's, you know, it's something where, if given the choice, why would you ever buy a paper contract if you could buy one that's completely driven by data, assuming that you can know that the data is trusted?
Right.
Right. So why would you ever want to have to deal with a human who can be having a bad day, or who is inherently biased because he works for the company that issued the policy,
Right.
and
He's
it's
got an
his job
interest in
to
it.
kind of find a middle ground, kind of try to keep you happy, give you just enough. Maybe say your car is not worth quite as much. All out the window now,
Yep.
right? So that model is being used in a couple really cool industries. We happen to take that model and apply it to cyber, which is, in my opinion, inherently more challenging than some of the other industries that are using it. But you know, we're gluttons, so it's But yeah, we want to increase the trust of this process, especially at a time where businesses are being left out to dry,
Right.
or are being forced to jump through hoops and pay, multiple times more for what they already had. Now,
Right.
again, I'm not saying that we're apples for apples coverage, but what I am saying is our product is inherently more trustworthy, inherently more accurate, inherently faster, and can provide a level of coverage that will be enough for you as a business owner, given this incident or peril. Right.
Right. And I think that with that, I think we're kind of hitting the end. Also, we're hitting a new record length. So with that, we'll say goodbye and save the rest of the stories for the next episode.
Great.
But thanks for joining, Brian, and as always, thank you all for listening.
Yep. Thanks, Robert.